Budget 2021 is days away, and this time is going to be interesting or confusing depending on how you want to see it. The usual range of numbers that we have been seeing for years will no longer hold. So it's all the more important to be prepared for what we may see and then benchmark what we do see against that. We'll start with the nominal GDP number. That's the number that underpins all budget expectations and projections. So the nominal GDP growth at one point in time used to be 11.5%, pretty steady for years. But that changed a while back. In FY20, we saw nominal GDP growth crash to 7.2%, and we thought that was bad. Then hit the pandemic, and we've seen a contraction in current prices terms of about 4.2%. That's FY21 based on the advanced estimates. The big question in the budget will be, what do you take as the nominal GDP growth for FY22? Now, a couple of months back, the RBI had done a survey of professional forecasters, as it always does, and that had pegged growth at 9.5% in real terms. You add about 4% inflation there, and you'll get a nominal GDP growth of 13.5%. Now, many believe that growth actually will be much better than that. You will see double-digit real growth somewhere in the 10, 11, perhaps even 12% range. So you could easily see nominal GDP growth being benchmarked closer to 15% if the government wants to. But they may choose to be conservative and keep it at about 13.5% or so. And if you see that number, don't say the government is overstating growth, say that they actually may be understating growth. But that's the kind of expectation that's there in the market on nominal GDP growth. Now let's move on to fiscal deficit. Again, we were inching very slowly towards that 3% mark in FY21. We'll see that path completely redefined. The expectation is that you will see FY21 fiscal deficit end up somewhere in between 6.5 to 7.5% of GDP. The range there remains fairly wide. So what happens in FY22? The consensus is veering towards somewhere around 5.5 to 5.6% of GDP. Now, at the headline between FY21 and FY22, that would suggest significant fiscal consolidation, but that may not mean a contraction in expenditure. We'll come to that in a minute. But 5.5, 5.6%, if you get that from the government, that's pretty much what the street is expecting. In gross borrowing terms, that will translate into a gross borrowing of about 11 lakh crore. Now, again, that will look lower than the 13.1 lakh crore that you did in FY21, but benchmark it to FY20 when you were borrowing 7.1 lakh crore in the market. So you will see a fairly sharp jump in borrowing on a steady state basis, and the kind of liquidity support that you've seen in FY21 may or may not remain in FY22. So you'd have to be mindful that even an 11 lakh crore gross borrowing number or an 8 to 8.5 lakh crore net borrowing number will still be something that the market will need to digest, and we'll see how well it does that. Now let's get into some of the budget math on the tax and the expenditure side. And here we're going to rely on a few views that have come in from economists. One way to look at the budget math is how NOMURA is doing it. So they pegged FY22 nominal GDP growth at about 15%. That would mean that you would get a gross tax revenue growth of about 16.2%, just based on long-term trends of tax to GDP. Now, they are saying that if you add in some non-tax revenue, and it's futile trying to predict how much they put in terms of divestment, etc. So we're not putting that number up on the screen. But NOMURA expects about 9.5% growth in expenditure. That is a conservative estimate according to some, because some believe that the spending boost from the government could actually be much larger. And here we're going to read out a slightly longish view from Neelkanth Mishra of Credit Suisse. Stay with us as we read through this. Neelkanth Mishra writes that continuing down the pro-cyclical path where weak government spending hurt growth in Q2 of FY21 and is adding to it in the recovery, the fiscal boost to growth could continue in FY22. He says that there could be 16 to 17% nominal GDP growth, which now appears likely. Given the largely steady tax to GDP rate over the past decade, this may deliver similar growth in tax collections. If so, the consensus expectation of 5.6% fiscal deficit, spending under that kind of scenario can grow 20 to 21% year on year. That's a large spending boost. Now, given the large share of non-discretionary expenditure, he says, this would imply about 4.2 lakh crore higher spending over FY20 on residual heads, with expenditure to GDP at 15.4%, the highest in a decade. The key takeaways from that is that the spending boost to the economy, the government spending boost to the economy, could be significantly higher than what consensus will be suggesting, and that would boost growth in FY22. If you look at the JPMorgan view, which came in a conversation with Shajit Chinoy, he too is predicting something similar. He is looking at it from the perspective of expenditure as a percentage of GDP. He says that in FY21, you will probably end up at about 14.8% of GDP in terms of expenditure. In FY22, he believes the government could add about 0.5% to 0.7% there, and that would once again take us to an expenditure to GDP ratio of about 15.5%. That's an important number to look for in this time's budget. That's why we're dwelling on it. But of course, then the final question would be, what are they spending on? Look, here everyone has their own expectations, their own preferences, but things you want to look out for. Certainly look out for what they're doing on the health side, health spending, defense spending, given the troubles at the borders with China that we have continued to see, would be important to track. Infrastructure is a big one, but there it's not so much about the on-budget spending. It is whether they find a structure outside the budget which can fund large-scale infrastructure over the years. A DFI has been spoken about. That's a development finance institution. We'll see whether that comes through or not. The social security side will be important. NREGA got a big mid-year boost in FY21. What would be the budget that they given for NREGA in FY22? Any other social security programs? Perhaps the talk of an urban jobs guarantee. We'll see if any of that comes. And then, every year there is that item on the banking side that gets penciled in. They will have to do another round of recap, or perhaps give some sort of a reform roadmap for the banking sector. So those are all the intangibles that we're working with, along with, of course, the budget numbers that we detailed earlier. Stay tuned to BloombergQuint through the next week. We'll get you all the numbers. We'll get you all the perspectives.